Alright, good afternoon everyone. Today is Friday, the 22nd day of August 2025. We normally do these things on Wednesday, but I had to go to Connecticut. My mother's ill and I had to do some things up in Connecticut with her, for her, and all that stuff. So we're getting started on Friday instead of Wednesday this week. Been a pretty active day so far in trading. This morning we didn't end on the high on any of the markets that we traded this morning, but we did alright. As far as the trading went this morning, we ended up with $552 a contract this morning. There's a trade setting up right now on the gold, right here. Right, we need a down close here on the gold, 419.4. You would sell from that 419.4. You'd sell for 18.4. Now, for anybody that's new to TV trades, if you want to take a free trial, you go to tvtrades.com right here, tv-trades.com, sign up for it there. If you click on any one of these orange things, it's going to bring you down to the bottom. It's $25 a week, $90 a month, $9.97 a year. After the trial, you get a free 3-day trial. Alright, that's how you take the trial. Simple as that. Now, for anybody who's new to TV trades, the stuff that you're seeing on here is really just two indicators. Alright, it's really just two indicators. There's a lot of things that are within the indicators, but all you're really looking for the midpoint over here, alright, all you're looking for is the price to come back and hit the midpoint, have the right color background, and then close back down on or below the midpoint as price comes onto the overbought. That's it. That's all you're looking for. Okay. Now, now the theory, you guys can hear me okay, right? Yeah, I'm sure you can. Somebody had just said there was no sound, but hopefully they're logging off and logging back on. Now, the theory, as most of you know, is that we want to capture entries on the retracement. All right, on price retracement, we want to capture the entries. To apply the indicator set, as you see it right here, this midpoint stuff is part of the trigger. Right, the trigger is obviously part of the trigger, and the midpoint is also part of the trigger. The background color that you see up here is part of the TV trades. These yellow arrows, part of the TV trades. Okay, that's how it's broken up. Now, really, all you're looking for is what just happened here. For instance, on the NQ, if the background is blue, you're looking for price to pull back down, hit the midpoint, and come off the midpoint with an up close as price comes out of the oversold. If the background is blue. If the background is red, you want to do it the other way. Hit the midpoint, come down off the midpoint while it comes out of the overbought. Alright, it's as simple as that. That's all you're looking for it to do. To put these indicators on, if you start out like this with no indicators at all, you would go to indicators like that. Once you're signed up and you have the indicators on, you would go to indicators like that, and then you'd put on you put on the TV trades. Okay, now by default, when you put the TV trades on, it's going to have this, alright, which is just the TV trades. Now this is something that I believe Mark had asked me at one point, but this right here is the default indicator that comes on when you just put the TV trades on, alright. You can turn that off right here. If you want to shut that off, you turn it off right there. You can turn it on and leave it on, and also put the shorts on if you want, going in the other direction. Now, the difference between that and the swing trade, we'll get into the swing trade here in a few minutes, but one of the differences is that this doesn't happen at the end of the trend. It happens near the beginning of the trend. Alright, near the beginning of the trend. It doesn't happen at the end of the trend. It waits until the trend starts, and then it jumps in a little bit toward the beginning of the trend is what it's looking for. Okay? Again, to turn that on, it's on by default, but to turn it on, you just check that little thing right there. Alright, and that's going to give you the long trades. Now, it looks like it happens whenever it turns blue, but it doesn't happen every time it turns blue. You have to have certain price action sequences that happen before it's going to print the arrow for you. Okay? So not every time that it turns blue, you're going to get one. But the TV trades gives you the background color. Okay, and the background color is important to the trade setup for the next thing, the midpoint trade setup. Okay, now let's just pop this back for a second because I think we did get the down close there on the gold. Alright, the gold triggered in. Here's the first trade on gold right there. Okay, and It triggered in pretty much the right place. So we're short gold right here on the down close right here. As price came out of the overbought, it triggered us in right there on the down close. Now I'm in exactly the right place actually at 18.4. That is where I had my order waiting. I'll explain that to you in just a minute, but I want to go through this setup portion a little bit more first, okay? On the TV trades, now the thing that I use primarily right now is the background color in here, right? There is one other thing that you can use that's a good feature to have activated. If you go to Style and you hit that right there, what that does is it prints a yellow arrow. If you have the background color is red, it prints a yellow arrow whenever the trigger goes into the overbought. If it's red, every time it goes into the overbought, it prints a yellow arrow. Now, the yellow arrow is not the trigger bar, it's the bar after it that is typically going to be a trigger bar, okay? It's the bar after the yellow arrow that is typically going to be a trigger bar. So it's just letting you know that price went into a position, the trigger went into a position where you're likely to have a trade on the next bar. Okay? That's what it's telling you. That's what the yellow arrow is telling you. Now, I don't have the trigger turned on. I want to add that separate, but I want to go through these individual things that have to do with the TV trades first, okay? So that turns that on. It's right here under Style, Trigger Alert Notice. Okay. Now, you'll see that the bar color here is, it's usually red when the background color is red, and it's usually blue when the background color is blue. But you'll also see right here, we have blue on a red background, or red on a blue background, like this. That is usually going to happen right before the background color changes. Okay, it usually gives you a heads up to let you know that the background color is about to change by having the wrong color bar, the opposite color bar on the background color. It usually gives you a little heads up to let you know that the background color is going to change on the next bar. Why is that important? Because when you want to trade with a midpoint strategy, you're trading with the background color. Okay, so if like this bar right here, if that was going to turn into a red bar, a red background color, I wouldn't be able to be proactive with my order. Okay, I wouldn't be able to put my order on ahead of time because it's not likely to be blue anymore when it changes. If I was going to try to buy, if I had a reason to buy, which is what this is suggesting, the next bar is going to be a reason to buy. I wouldn't be able to do that, or I wouldn't be able to put a buy stop limit order on with confidence right now if this were a red bar right here. Okay. Now, if you look at the trigger, what it's suggesting here is that this just went into the oversold, and so you're looking for price to come out of the oversold to give you the trade. Okay, that's what you're looking for. But before I get into that, I just wanted to finish covering all this. Okay. So, again, the things we're looking for here with the TV trades, the stuff that I'm using right now, primarily using right now with the TV trades, is the background color. And the yellow arrows, I use them to give me sort of a heads up. Now the thing about this is you can set alerts for these things. Okay, let's go back here and see if we have any other trades that are triggering in here, because the gold one isn't really giving us anything. We're about to have a trade trigger here on the ES. It's got a low here of 86.25, so we'll be buying 88.25 on that. The NQ, as you can see, is just about to trigger a trade on the long side. Now you see how the background color just changed to red on that? So you cannot, with confidence, put a buy stop limit order on at the top of this bar, or above where this bar is going to close. You have to wait until the bar actually closes to see if the background is going to be blue or not. Okay? If you were down here right now waiting for it to come out of the oversold, I wouldn't do this anyway, because this last one didn't make it into the overbought, but it's not actually a valid trade. But it's letting you know that that just got down to the oversold. Okay. So on the ES, we're still looking for the up close, and the low of this is now at 86, so you'd be buying 88 on that. Alright, it looks like that. You'd be buying 88, buy stop limit order like that. Okay. The gold is still trying to work itself out. The gold should get down to 416.5 right here. 416.5. It really hasn't gone anywhere yet since we entered. Okay. See, the background color did change right here. So that suggested the next bar was going to change the background color, and it did actually change the background color. So now you'd be looking for short trades, not long trades. Whenever the background color is red, you're looking for short trades. Anybody follow me on all that? Jill, what is the green bar on the ES? Yeah, the bar color, let's go in here. Let's just shut this off, Jill, okay? Inside the TV Trades range trigger, if you're using the bar colors up here on price, go in here to style like that and shut off the bar color. Right? It's within the TV Trades range trigger. Okay, did you see how that bar was blue? That's what Jill just texted me and asked me about that blue bar. So we never did enter, oh, the gold, sorry, the gold. The gold is starting to run right now. I'm going to go to break even on the gold. I'm actually going to lock in some profit on the gold. I'm going to lock in 5 ticks. That's $500 right there. 6 ticks. 7 ticks. That's, well, 9 ticks. That's $900 right there. Okay, now it should go all the way down here to 16.5, but we're out with 9 ticks. Okay, so we got 9 ticks on the gold. It should continue down. I wasn't paying that much attention to it, but I'll just draw that in there right now. 9 ticks on that. Now we did not end up with the trade here on the ES. The order is still waiting there. I'm just going to cancel that now. Okay. But you see how the background color has changed to red on everything right now. So we're only looking for short trades across all these markets. Jimmy, how do I get the arrow to change color? Which arrow to change color? The arrow or the bar, you mean? Jimmy, when approaching the trend. Oh, you're talking about the bar, right? Yeah, if you put the TV trades on, if you just put the TV trades up, Chris, how did you get over there? Hang on, here we go. Gotta move that over. There we go. Okay. If you just put the TV trades on without the trigger, it's going to just have the right bar colors, alright? Because that is part of the TV trades, to color the bars like that, to color the bar with the appropriate background color to make that change, let you know. If you put the trigger on by default, the trigger has this on. That's what I was just showing Jill. Jill just asked the same thing. By default, it's going to have this bar color on, and if you have that bar color on, that corresponds to the trigger, not to the background colors up here. Okay, it corresponds to the trigger. So you got to go in here to the TV Trades range trigger, go to style, and shut off the bar color. And that will set it here. So it's getting the bar color right now from the TV Trades instead of getting it from the TV Trades range trigger. Okay? Okay, that was a good question, Jill. More than one person wanted that one. Alright. So let's get into that a little bit. Right, you see this stuff here, the midpoint, the outer bands, and the midpoint. That's all part of the TV Trades range trigger. Okay, so basically what it's showing you, the reason it's part of the TV Trades range trigger is because its location is determined based upon price action and the range trigger together. Alright, it's a combination of the two that determines where all this stuff is going. Now you see, this just gave the yellow arrow here while this went into the overbought. Now, the fact that this is in the overbought, because you're not anywhere near the midpoint, it doesn't really mean anything right now. This one right here, though, you see how close this is to the midpoint? Right now, it's going to take an up close to get this into the overbought. It takes 2 bars, usually. 2 bars to get from the at a minimum. It takes 2 bars to get from the oversold to the overbought, or the overbought down to the oversold. See, one of these bars is already closed, so it's brought it halfway, or a third of the way. And the next up close would bring it all the way up into the overbought. If we get an up close, it'll bring it all the way up into the overbought. Now, that sets us up for a possible short trade. It's not the short trade yet, but it sets us up for a possible short trade. Right? Whereas if you look at gold over here, see, gold is still in the oversold. So an up close on this bar would get it right about here, and an up close on the next bar would get it into the overbought. But you may or may not be touching the midpoint. Okay, with this one right here, an up close on this one is going to be right here. You won't be touching the midpoint. It will be overbought, but you won't be touching the midpoint. Okay. So here's the rules. All right. It's as simple as this. You want, let's use the Russell. You want price to get up and touch the midpoint, and for this to get into the overbought. You want both of those things to happen. All right, if they happen at the same time, that's fine. But you want both of those things to happen, and then when you have a red background, you want it to close on or below the midpoint and come out of the overbought at the same time. All right, on or below the midpoint and come out of the overbought, but it has to hit the midpoint before it does that. All right, that's the whole thing. It's as simple as that. So, I mean, the idea is that price is going down like this, and then it's pulling back 50% like that, and then it's going to go down again down to this level eventually, which it didn't do until all the way over there. It's going to go down again, put it another leg length like that one, and then pull back 50% of that, and then do it again and go down another leg length like that. And that's what we'll be looking for here. So we've gotten it, because we had that up close, it put us in the overbought. So now what we need is this to go flat down here, this to hit the midpoint with an up close, and then this to give us a down close, and this to pop out of the overbought. Okay, down here. This to drop down out of the overbought. That's what we need. Okay, that's what I'll be looking for. And if it happens, great. If it doesn't, that's okay too. It is possible right now, it is possible that this bar could close down. Now that it's hit the midpoint, it is possible that this bar could close down and pull this out of the overbought. So you could have a trade on this bar. So what you do is you bring up your DOM like this, right? That's always on top. You bring your DOM like this, and you see where the high of the bar is. The high of the bar is, I still got the wrong thing on here. I'm going to use this. The high of the bar is at 65.9, so I'm going to sell 64.9. That's 10 ticks off the high of the bar. This is a 9 range bar. So if the high, okay, well, this did actually give the up close, so it's going to go flat here, and now we want this one to close down. So the high of this bar is 66.2, so I'm going to sell 65.2. 10 ticks off the high of the bar. Why 10 ticks off the high of the bar? Because 9 ticks is the limit of the bar, and that is going to be right here at 65.3. If it goes down one more tick, it's going to put us in here right around 65.2. Right, that's what we're looking for. So now the high is up at 66.4, so bump this up to 65.4. Now, the midpoint is right here at 65.8. 65.8. That means price cannot get up above 66.8. Okay, it can't get up above 66.8. If it gets up above 66.8, then the down close would be above the midpoint. You don't want that. If you get the down close right here, that'd be perfect. And we'll take that trade. It'll pop out of the overbought. It'll be on or below the midpoint. And we'll take that trade. And that's exactly what you're looking for. Okay? And it looks like it's probably going to happen. There it is. It just happened. And it's put us in right there at 65.5. Perfect spot. Alright, so now this goes 5 ticks into profit. 5, and I'll bump the stop to break even. It's going to go one more tick, and I'll bump the stop to break even. It's going to go. There it is. Okay, so now I move the stop to break even. Okay, now this should go all the way down here to 63.3. I'm going to lock in just one tick on this. It should go all the way down to 63.3 right now. Okay, is what it should do. Now, this is the Russell. Okay, so if I lock in 2 ticks, we'll be at $1,000 right now in the morning. On this session. And it should go all the way down here to 63.3. Okay, that's where it should go. Now the DOM is suggesting it's going to go to right here at 64.0. Either way, that'll be fine for me. 64.0 is good. I'll take that. Okay. But it's suggesting it's going to go down to 63.3, so we're out with 2 ticks on that. But do you see what I was looking at here at 64.0? That number right there. Okay, that's where price wants to go to. The charts are suggesting it's going to go down. The DOM is suggesting where it's going to go to once it does go down. Okay, so we just picked up a couple of ticks on that. Alright, so I went through a lot of things with this, just the setup and all that, but I want to go through something else really quick right now. Okay, because I got this question from you, Jimmy, earlier today, but other people are probably asking the same thing. Alright, let's just throw the swing trade on here. Now, the swing trade is a standalone tool, right? You don't need to have anything else with it. The question that I get, that some of you guys are probably wondering, is should you trade it with the background color? No, you should not, because usually the background color is not going to match up. On the larger time frame, it's not going to match up. You can see right here on a smaller time frame, it does pretty well if you match it up with the background color, but it's not made for that. Alright, it's made for a larger time frame. It's not made for a 9 range. On the Russell, you might want to do the Russell on a 47 range or something like that. It's made for a larger time frame like this. Okay, it's not made for the shorter time frame. It works okay on the shorter time frame, but this is what it's made for. And and it's a standalone thing, right? You don't need the background color at all. I mean, you can put it on there if you want to, but you don't need it. Okay. You see, the way that this works is the little gray arrows. If I go in here and I do this, I got to go back and show you how to put those alerts on. Remind me to do that, all right? Now, the gray arrows come out usually before the black arrow is going to show up. So what they're letting you know is it's almost time for a trade. All right, it's almost time for a trade. And in an email that I sent out a week ago, was about one of our subscribers who set this all up on his phone. When he got the alert on his phone, he actually does an ES on a 50 range. I think 50 or 100 range. And he gets the alert on his phone. He has plenty of time to go and get the trade ready because it's such a large time frame, and set it up so that he'll be able to put it on with his bracket. He doesn't use exactly the same risk management style that I use, that I suggested. He puts a stop on that's a little bit bigger than the size of the bar, but he's got a set target that he puts in every time. He doesn't go to the first gray bar, the first gray arrow. But the idea is that you get the gray arrow when it's about to trigger, right? And then you get in the trade and you stay in the trade until you get the next gray arrow, because the next gray arrow happens usually right before it's going to trigger in the opposite direction. Okay, that's what the gray arrows are for, to let you know that the next bar could be the trigger bar. Now, you might say, well, if you know that, why don't you just go on the open of the bar right after the gray arrow? Well, look at how many gray arrows didn't go on the next bar. It was the bar after the actual trigger bar. Paul, do I have not live ones? I do what I do in here on Wednesdays, and I do a different thing on Monday mornings. But Paul, what you do get that is actual live in real time is you get access to these channels where they do go out in real time. Like these are some from today. These right here are from today, August 22nd. You do get this in real time, okay? And this is Telegram. Okay, and this is just one of the Telegram channels. This is the TV Trades Trade Signals. This is the TV Trades Swing Trades. This is the Micros. I think there's another one too. This is just the regular channel. And there's another one in here too somewhere. Swing Trades. Yeah, these are the ones right here. There's Future Signals. This has the NQ. These are on smaller time frames, right? Some of them. Yeah, some of them are smaller time frames, some are larger time frames, and it has just futures. Okay, and Jessica. This has the crude in it. This is what I was talking about when you were texting me over the weekend, or I felt like over the weekend, but I think it was Wednesday. This has crude oil in it. All right. Now I can put crude into the swing trade signals, and I will put crude in if you want me to. But this one right here, TV Trades Trade Signals, this has stocks in it too, equities, and it has ETFs also. So it has a bunch of stocks and ETFs and all that stuff. Because what we use in here, like this is an ETF right here, the QQQ. That said, this was this morning. It said to buy the QQQ at 572.36. Now I can go and look at and see what that came out to be in a few minutes here. But that was, what time was that at? That was this morning at 10:25. So we can go check that out in a little while. But you have that, and the swing trades are also right in here. Okay, Paul. The question was, do I have a daily trading calls? These are where you get the calls, all right? And these are just totally based upon the signals and different time frames. So I'm gonna split it up a little bit more. I'm gonna make another one that has swing trades for. I think I was gonna make another one. How was I gonna do this? I had thought something out. I was gonna make another one that it splits out the swing trades between equities and futures and stuff like that. Okay, but I was back here talking about this. Sorry. Please add crude oil, John said. Okay, I'm gonna add crude. I gotta find out the best time frame for it, John. And that, the best time frame varies from day to day. I was looking today and a 19 range looked pretty good on crude. But for the Russell right here, we have a 47 range on the Russell, and for today's action, if you get the gray arrow, and the gray arrow lets you know that the next one is likely to be the trigger. So if we got a black arrow right here, ideally you're going to stay in it until you get your next gray arrow. Now the gray arrow, you're going to get the gray arrow on this down close. So the gray arrow is going to trigger on the down close of this bar. So you'd be shorting up here on the down close of that bar and buying back down here on the down close of that bar. Okay, so you're selling on a down close and you're buying on a down close. So it works out pretty well. And over here, this would be your black bar. You'd buy on the up close, and your first gray arrow was right here. You'd buy on the up close of that bar right there. Okay. Over here, you'd sell on this down close, and you'd buy back on this down close right here. Ideally, that's how I want it to work. Now, I did send out an email that's got some risk management strategies for situations like this right here. You'd sell on this down close. You'd probably bump your stop to break even after you get one full bar length of profit in the trade. And your risk would be a bar length plus 10, I think, I say 10 or 20 to 30%. Depends how big the bar length is. 10 to 30% of the bar length. It'd be like, if you had 100 range, I'd usually do 110 tick, 110 to 120 tick stop with a 100 range bar. But with a 50, you might want to do a 65 stop, which would be a 30% change. It's up to you. I do have some parameters. If you go here to targetviewtrades.com and you go over here to more and you click on risk management, I do have some things set up here for the smaller time frames. Okay, I don't really have anything set up for the larger time frames, but I will add some risk management strategies to this that I did send out in an email some time back. I don't know when I did actually send that out. Why the black arrows are not triggered after the gray ones? Because I shut them off right now. So just for this, I shut them off. Well, yeah, if I go in here and I turn the black arrows back on, they're right here. There's your black arrows. Okay. That one, that one, that one, that one, and that one. I had shut them off just so I could talk about the gray arrows without being too distracted. Okay. Okay. Yeah, how can you get those Telegram signals sent to your Telegram? Dan only gets now. Jill, you got all the information. You can just log into it. You have all the information, those emails that I sent to you today. Just log into that with your ID. Right? Just go to those channels with your ID. Okay. I'll see that you did it. Like when I just showed that a minute ago, there was, I think Frank had just signed up a few minutes ago. Okay, I'll see that it's you, Jill, when you sign up. Okay. Let's see, I want to answer all the questions. I wanted to show you this. Now, the cool thing about this, guys, is in here you have the option to have alerts set on these things. If you check the alert box right here, then that's going to trigger an alert from the code, but it's not actually going to make the alert so that you can use it yet. All right, that'll trigger it within the code. The code will say, okay, trigger this alert to the system. But the system doesn't know what to do with it yet. You have to do that. You have to go here to alert, like this. Then choose swing trade, any alert function call, and in here, type in whatever message it is. Like if you got the alert, let's go in here and let's just do the pre-alerts, okay? And we'll just do the gray arrows. Right, so right in here, if you want to be alerted whenever there was a gray arrow, come in here under alert, you do swing trade, any alert function call, and in here, you would want it to say, it will say, you just put in the symbol here and it will give you the information about it being a pre-alert or not. Okay, over here right now, if I look at these right here, the actual alerts that I have triggering, they start with an asterisk. The ones that trigger off of the swing trade stuff, they start with an asterisk like that. TBT swing sell. Now this right here is one that gives this is from a gray bar. You see how it says TBT swing sell likely on down close of the next bar? That was on the gray bar on a 15 range ES this morning. Okay, so that was a 15 range ES this morning at 13:23. Now I shut that off, but you can see the gray bars and all that, and that was it. There was this one right here, I think, right? 15:23, is that what was the open of that bar? Yeah, it was this bar right here, but the close of that bar is what triggered that alert right there. But I was just showing you this one right here, sell likely. That was this gray arrow right here that says sell likely on the next bar, and then the next bar triggered, and then you got an alert right up here for that next bar right here. Okay. That's the way that works. The ETF thing that we looked at this morning, that was on a QQQ, right? I was trying to find this for you, John. That was a crude oil thing. It was a crude oil, I think, right here, right? And that was at 10:23 also. On crude, it said TVT buy. And I think that was this one, right? No, that wasn't that. That was... maybe that wasn't today. Was that today? I think that's not today. I think was it? There's crude oil at 250 range, TVT buy, and that was on 822 at 1019. 822 at 1019. Okay, I don't see it on here, but you know what? That was triggered from a whole different thing. It's not these bars here that triggered that. That was a different thing. But it triggered the buy here at 1022 at 1019. Right here, it said on the close of this bar, it said to buy this bar right here. So it was a pretty good trigger this morning on that one. Why the black arrows are not triggered after gray ones? Yeah, I already answered that, right? So, okay. Now I got totally distracted there. But that's how you set the alerts for these things. Okay, you come up here and you hit alert, and what I do is I put the symbol in. You know, when I set an alert, I'll come in here and you would choose swing trade and choose any alert function call and put the symbol in under message. Put in the symbol in the time frame, and then that'll be up here on the top. The dark stuff up there, it'll be in the top. The symbol in the time frame, and then the actual message gets generated from the code that gives you the information. Alright, now the swing trade stuff, the most recent swing trade stuff that just has the asterisk in it, it just has the asterisk. It just says next up close or next down close and that stuff. The older stuff actually gives you the current price, target, a stop, and all that information. Okay, those are the older ones that I put in there. On the ES15 range swing trades, how many stop outs do you take? Because when they go correctly, wow, they really go. It's up to you, Wayne. But on the ES15 range, you're not going to have that many trades to begin with. All right, I mean, you'll have a fair number of trades every day, but the 15 range isn't really a huge one for swing trades. It's not a huge number for swing trades. You know, the fact that you have a whole bunch of them during the day isn't really a huge number for swing trades. You know, swing trades, you usually probably only want to have 1 or 2 a day. You don't want to have like 10 of them like this in here. Now, we did have a lot of range today on the S. What's the highest we got today on the S? Because I was thinking we're going to get up to 45.10 is what I was thinking. If we broke through all-time highs, we're going to get up to 45.10. The price action suggested that this morning. What was I looking at this one? A 7 range like this, right? And the way it was looking to me this morning was when I did that this morning, when I figured that, it was here. I don't know, I had it all worked out this morning, and it did the pullback exactly as I wanted to do the pullback, but it hasn't done the run up yet. But I think it was from here. what I was looking at was from this low up to that high. Wasn't in at the time. I think at the time it was up to somewhere in here, this high, I think, something like that. And I was saying when we get this pullback over here, that's what it should go up to. That should get up to, no, that wasn't it. It was somewhere else that I did it from. Or it could have been that start up to here, maybe. Maybe that's what I was looking at. I have it all drawn out on the other thing, but it should bring us up to 510. Yeah, and that's what it is, up to 510.50 right there. That's what it was. Anyway, once we go through all-time highs, that's where I see price going up to 510.5 to start with. Back to this though. That was a swing trade, the TV trades. What I haven't done yet is the TV trades range trigger. I've taken 2 trades so far, and I'm up $1,000 on those 2 trades. But has anything else triggered while I've been doing all this? Is there any specific time of day recommended for swing trades? They're all day, Paul. That's why I set up the alerts on those. You can set up the alerts to be notified. You can just have them running all day long at night, whenever you want. You can have them running. I know some of you guys that are using the prop firms, I know they have some limitations on when you can trade, like hours you can trade and stuff like that, and that's going to be a problem. Excuse me, that's going to be a problem on the larger swing trade time frames. You're going to have to break it down to a smaller time frame if you're going to do that. Okay, and what range would I use on the SI? The 50 is pretty good on the ES, or you can use a 47 if you want to use a multiple of 4 minus 1. This was about the swing trades. Okay, usually works out pretty well, and you can go down to a smaller one if you want to do like a 27, which is about half that. That works out pretty well too. Okay, why is this not updated? What's my? This is how you check to see what's new. If you have that little purple arrow, there's an update available. You do check what's new. And I don't know what is new on this that I didn't do before. I added more text to the alert for pre-trade notification. Okay. I added, the text that I added was in the alert. In the alert with the asterisk, it says, see on this one right here, it just says close price. It doesn't say on next up close or next down close. If I update this right now, do update to latest version, and now the next time that alert comes out with the asterisk on it, whichever this one is, it's going to say on next up close or next down close or whatever. Got the word up close or down close was the text that I added onto that. But if you ever get that little purple arrow, it just says you have an update available, and you go in there and see what the update is, and you can just update it right there. Okay. Again, the alerts. I'm all over the place now. I did have a direction that I was going in, but now I just kind of scattered my mind. I was talking about alerts, and I wanted to talk about alerts on these yellow arrows too, because when we first started this, I was showing you how the yellow arrows let you know when you have a trade possibly coming up on the very next bar. All right, you have a trade possibly coming up on the very next bar, and you can set an alert on that too. For that, you need to go to alert. Right, you have TV trades on. You go to alert, choose TV trades, and under here I have individual alerts. This is the trigger long potential and trigger short potential. Those are the yellow arrows. The long potential is going to be the yellow arrow pointing up with a blue background. Trigger short potential is going to be the yellow arrow pointing down with a red background. You can turn them on, and when you turn those on, because you're not doing any function call, you see with any function call you don't have anything else down here. Alright, you want to change your message around if you want, you can change your notifications around if you want, but you don't have anything else down here. But if you're using individual things like this, then you have to choose when you want it to trigger. Okay, so I do once per bar close. once per bar closes what I do. So when that bar closes, it's going to paint that yellow thing, and it's going to let you know. It's going to send you an alert to let you know. Now in here, you have more information you can put in. You can put in the time frame here and all that. That's going to be the stuff up here, the bold stuff. But down here, you determine what you want that message to say. All right? The message that I send with the alert doesn't get printed. The message you put in here is what gets printed. Okay? That's what gets printed in there. So again, to put that alert on, for the yellow arrows, first to turn the yellow arrows on, you go to TV trays, go to settings, it's the style right here. This one, right there. Okay? And what that shows is when this is going into the overbought with a red background or going into the oversold with a blue background. And the reason that's important is because it itself can be a trade, or the bar after it could be the trade. That's a lot of information, right? If this is your first time watching this, you'll be able to watch this again. This is being recorded, and the recordings are always put out here. If you go to Target View Trades again, Target View Trades, targetviewtrades.com, the recordings are here, upcoming and past webinars. This one will be right here, at the end of the day today. Right? This was the last one that I did last week. This will be moved down here, and all these ones down here are the ones that I've done in the past. So you can go watch any of these, and the topics and all that. You can go and read them if you want to watch any of those. But this one, last week's will be moved down to there, and today's will be placed right here. Right, it'll be out on YouTube as well. This is a YouTube video that I'm putting there. You'll be able to sign up for next week's on Wednesday right here. All right, you can also sign up for that on the home page. It'll be right here. You'll be able to sign up for that. Okay. Okay. So the question that Paul had asked a few minutes ago was, is there any specific time in the day recommended for swing trades? I personally like to trade when there's more volatility and more action in the market. All right. I mean, you can put a trade on in the middle of the night, and it might take hours before that thing does anything. Okay, but if you put it on during the day, usually you're going to get your result by the end of the session. You know, the earlier in the session, the better. And I started to say, if you're doing prop firms, if you guys are doing prop firms and you're concerned about, not being able to hold trades overnight, having to bail out by the end of the session, then you're going to have to go to a smaller time frame. Okay. Let's just bump this down, see if you have any other trades I could take right now at this juncture. Put this back on. Okay, we almost have another trade here. Did we have any more in here? We had this trade that we took on gold back here. There was another gold trade we could have taken right here that would have given us some profit. We took one trade here on the Russell a little while ago for a couple of ticks, and it hasn't set anything else up. The ES doesn't have anything right now. The NQ is almost good a trade. So this went into the overbought, and we just hit the midpoint right there. So a down close right now is going to pull this out of the overbought and give us a short. Now the NQ, I have the NQ on a 19 range, so it's 5 points from the top of the bar to where I want to sell. So the high of this is at 85.20, so I want to sell 80. Oops, I want to sell 80.25 right there. Hang on. The down close right here is what I wanted to sell. Okay, and I just did. All right, so I'm short right here. Here it is. Okay, so the down close of that bar, which was at 80.75, and I'm in exactly 80.75. So I'm in at just the right spot. Now when this goes 10 ticks into profit, I'll bump the stop to break even. It's going to go 10 ticks into profit. So go down here to quarter, right down there. 78 and a quarter. Right. Once it gets down there, I'll bump the stop to break even, and then hopefully we'll start locking in some profit on this. There it goes. Stop to break even. So now this should go down here to 72 right now. I'm going to lock in 4 ticks on this. That's $200 for me with 10 contracts on. But it should go down to 72. I'm going to lock in 8 ticks on this. That's 400. Still should go down to 72. Okay, we'll see what it does. It should go all the way down here right now. There it goes. Alright, I'm going to lock in. That's 16, 20, 24. And I'm out with 24 more ticks. Okay. So that was pretty simple, right? And 72 is where I thought it was going to go, and 72 is what it just hit. Pretty simple stuff, right? You're looking for the red with a red background to come down below hit the midpoint, close below the midpoint while it comes out of the overbought. Pretty simple stuff, right? And did everything I wanted to do. Everything. Everything I expected, everything I wanted. It's all good. Alright. Let me take a break. A breather. I've been talking for 45 minutes straight right now. Do you guys have any questions about any of the stuff that I've shown you? Anybody ask any questions I haven't answered yet? Damn Joe. Did you come back in? Damn Joe. They didn't come back in yet. Damn Joe. They've been a long time subscriber. How do I find the logic, the target logic, like I said, 72? It's right here in front of you. It's right here. That's what... Let me explain the midpoint stuff for you. That's a good question, Paul. Let's blow this up, okay? Now, if I get rid of this, what I showed you earlier is we're looking for price. You know, price always does the same thing, right? It goes up and down, up and down, up and down like that, right? And we're looking to enter when it pulls back like this. And history has proven, I was going to say the assumption that we make, but I'm going to say history has proven that it is likely to pull back 50% of the leg length. And when it pulls back 50% of the leg length, it's likely to duplicate the leg length. So that's what I'm looking for, right? Now, the first part of duplicating the leg length is getting to the prior swing low. Okay, that's the first part of duplicating the leg length. It's usually going to be half of where it should go when it gets to that swing low. That's 50% of the way to your target, usually, of where it should go. But usually that's plenty to take profit on and get, you know, and make money. Like that right there, I picked up 24 ticks. That was $1,200 I just made right there. All right, $1,400 I just made on that trade with 10 contracts on. I expected it to get down to here, the prior swing low, at least. All right. Now what happens is when price is moving like this, right? It's going down like this, and it goes up, and when it's a strong trend, it's going to duplicate the leg length, right? It's going to duplicate the leg length, so it's going to go through that and duplicate the leg length. And then as the trend starts to weaken, the pullback up is going to get a little bigger, and the push down is going to get a little smaller. So it's going to start, you know, just barely going through the swing low, like it just did right here, just barely going through the swing low. And that's showing weakness. And if the pullback ends up being bigger, if this pullback ends up going up to like right here, then that's a much bigger pullback. So it probably won't make it down to the swing low if it does that again. However, if this pullback is smaller, like it's looking like right now, then this next push down could be bigger than this push down. But either way, the minimum that I'm expecting out of a trade is to get down to here, right? That's where that 72 came from, Paul. All right. Now, the midpoint tool that I created for you guys, and for me, because I trade for a living. So far in this session, I'm up $2,400. But the midpoint thing that I created for you guys, and for me, does all this for you. All right, it keeps track of the midpoint. And there are tools that are out there that do something like that. You know, I've shown you guys, those of you that have been here in a while, I've shown you in the past. If you go here to technical and you go to Don Chin channel, like this. What that does, it gives you the high and the low and the midpoint of some number of bars back, some random number of bars back that you choose. Right? Its default is set to 20, but you can do it to 50 if you want. And that's going to spread it out a little bit bigger. It's going to say, okay, 50 bars back. I want the high and the low, and I want the midpoint of those two things. All right. It's not really dynamic. It doesn't give you anything really dynamic. it's set to 50, it's always going to be set to 50. It doesn't work with the market. It doesn't flow with the market. All right, it's just set to 50. So if the market starts getting really fast and it starts throwing in highs and lows every 10 bars, then this 50 is not going to be very useful to you. But if it's really slow and it doesn't throw in for 100 bars, well, then the 50 is still not going to be useful to you. So what I did is I based it on the trigger. If you've got a red background, when it comes out of the overbought to when it goes back into the overbought, is where it determines the calculation of the midpoint. All right, the high and the low and the midpoint. That's what it's looking at. So like this, right here, if I get rid of that downchain channel, this says, all right, right here it came out of the overbought. That's where the high starts. And the high is going to stay in the same place until it gets back into until it comes back out of the overbought. And then the high is going to change, right? And then it resets the midpoint. That's what it's looking at. Okay? No, you take one signal. Like this right here is a secondary trade right now. All right, you would take another one right here. You could have taken that first one right here, and this is another trade right now. If we get a down close right here and it pulls it out of the overbought, out of the overbought, then that'd be another trade. So right here, the high of this bar is 78.25, so I'd be selling 73.25 right now. And I'll just put that order on right now, and I'll bring it over so you can see it ahead of time. Okay, so the high of this bar is 78.25, so I'm selling 5 points below that at 73.25. The down close is going to be right here at 73.50. So if it does give me the down close, it's going to pull it out of the overbought, and it's going to trigger me in at 73.25, maybe somewhere around there. Okay, so now this bar actually just changed. Let me see if this is always on top. It's not. So this bar just changed a little bit. The high is now at 78.75, so I'm selling 73.75. 5 points below the high of the bar. Okay. Now, as long as that's going to close below the midpoint, on or below the midpoint, it's going to pull this out of the overbought and give me a trade. All right, as long as it's going to do that. But remember what I just told you a minute ago about the leg length? This one right here, this is this whole leg length down. This pullback was kind of small, so it should work out. It should at least get down here to the swing low. But you see how this right here, Paul, is calculating what you should be looking for. The minimum you should be looking for is 66.50 right here. All right. It's got a high of 78.75 still, so I'm still selling the same place. If it goes up higher like that or like that, 80. So I'm going to be selling 80 down to 75 right now. Okay, 80 down to 75. If this bar closes up, it's probably going to end up ruining the trade. But right now, it's still a valid trade. It'll come out of the overbought on or below the midpoint if we get a down close. Okay, so it's still a valid trade. And I would fully anticipate it's going to get down to this level right here. Okay. So this last one right here, it got down to there, and then it pulled back. This wasn't one because it didn't come out of the overbought, but it still went down and got through the swing low. Now it's pulled back and it got into the overbought, and it's gone sideways in the overbought. And that's fine that it's gone sideways. You're still looking for it to come down. If it stays sideways in the overbought and it gets too far up above the midpoint, then it disqualifies the trade. All right, like this bar right here. If this bar closes up, it's probably going to disqualify the trade, like that. It just disqualified it. So now I'm going to cancel this. And I kind of had an idea that this was going to happen anyway. You see how we had the blue on the red background? See how the background color changed? So it kind of gave you an idea that that was going to happen anyway, ahead of time. Okay. Did you see that? How all that came together? It all just flowed together there like that. Because Jimmy, you were asking earlier, right? How to get this to show up, be the right color. You have to go into TV Trades Range Trigger and shut off the bar colors down here, because these bar colors correspond to this conservative bar stuff. Okay, you probably don't want that. Okay, did the black arrows pop up? Just wondering. I don't know. I don't have them turned on. Yeah, we did get a black arrow right there too. So the black arrow said to go long right there. It said to go short back here. It said to go long back here. Now you don't use the background color with the black arrows, right? You don't use the background color at all. Black arrows, they operate standalone. But yes, they all just popped up too on this 19 range IQ. Okay. Oh, sorry, you asked that a long time ago. I was scrolled all the way up. You didn't ask that right now. Sorry, I thought you asked that right now. Jerry, I thought you asked that right now. Okay, Frank, you understand the midpoint trigger better now. Good. I know for some reason everything scrolled up on me, Jerry, and that was it. The midpoint? Yeah, if you're bouncing off the midpoint, that's, I mean, you know, in the past when people watch me trade and they say, oh, well, why didn't you take that trade? Why didn't you take that trade? Why didn't you take that trade? Well, you know, there's a place there's good spots to trade and spots that are not good to trade. And the market shows weakness. The market actually shows strength and weakness to you guys all the time. It shows it to all of us all the time. It shows you when it's getting stronger, when it's getting weaker, when it's got strength and it's just adding on to the strength. And when it's got weakness. You know, Jill, I was not really paying attention to it, but if I was paying attention to this, I wouldn't have put the order on ahead of time, Jill. With the blue, it wouldn't have scared me out of the trade, but I wouldn't have put the order on ahead of time like I did. I would have waited for the bar to close to make sure that the background was the right color. Okay. Jill? Jill's question was, didn't the blue bar scare me out of the trade? And the blue bar, normally, I wasn't paying attention to it, honestly. I wasn't paying attention to it because I put the sell stop limit order on just based upon the numbers that the bar was giving me. But normally I wouldn't put the sell stop limit order on ahead of time if the bar was the wrong color. I would wait until the bar closes to make sure the background color is right, and then I'd enter the trade. Okay? What if the black arrow shows down and the yellow shows up? Well, the black and the yellow are never going to be on the same bar. Because the yellow happens when it goes into the overbought or the oversold, and the black happens when it comes out of the overbought or oversold, well, and a whole bunch of other things. But the black and the yellow are never going to be on the same bar. Okay, Jerry? You know, you're talking about the black arrow with the swing trade. And really, again, the swing trade is a standalone thing. You shouldn't have yellow arrows on there at all. But you could have a yellow arrow, but you're never going to have a black arrow and a yellow arrow at the same time. Okay, the question was, might not have heard, but what if the black arrow shows down and the yellow arrow shows up? Now you could have a black arrow followed by a yellow arrow, like this one showing up with that one showing down. But again, you shouldn't have them on at the same time. The black arrow is part of the swing trade, and the swing trade is a standalone. Now, one of the questions that I got, Mark, Wayne, you gotta put in the password. Jimmy, if you in here, if you have that unchecked and checked, it's going to be different. Okay, you see that right there? And that right there. TV trades has to be checked with the TV trades background. Okay. Alright. So let's put the TV trades back on here right now. Okay. So this right here would have been a long trade right here. Okay. Now, it's important that you understand this part. Alright. If price comes out of the oversold like this on a blue background, it has to go all the way into the overbought before you can take another one in that direction. Alright. It has to go all the way into the overbought before you can take another one in that direction. So, like this just happened over here, where it came out of the oversold on a blue background and gave you this trade right here that was just enough to get you stopped to break even, I think. It went from 78 entry up to 81, so it went 12 ticks into profit. Stop goes to break even after 10. It's just enough to get your stop to break even. Then, if you weren't paying attention to the background color and you were looking at it when it came out of the oversold here, this never went into the overbought, so you would never be interested in taking this right here, okay, for the long. You'd never be interested in taking that one again for the long. Or even this right here, where it came all the way down, went into the oversold, but it didn't make it back into the overbought. You wouldn't be interested right here in a short, because actually you would be at this point because it went all the way back up there. But you wouldn't be. It's got to go all the way from the overbought to the oversold and oversold to overbought. It's got to do the complete cycle to trigger another trade. Okay, that's to stop you from getting caught up in chop. Okay, so like right now, we've made it into the overbought. We need to get into the oversold to give us a long trade here on the NQ. Okay, and that's what we'd be looking for. So Paul, let me go back down to the bottom. Hey, where'd Paul go? Okay, Paul, you're still there. Does anybody want to see a market that I haven't shown yet? With anything on it that I haven't shown? Let me just put the stuff back on here so I can take some more trades if they trigger. Because right now I've just shown these 4, and I know some of you guys might like to see other markets. Soybeans, crude oil. John wants to see crude. Alright, let's look at crude on the 19 range, because that's going to be, you want to look at it more of a swing trade thing, right? So we'll look at the leading contract on the 19 range swing trade. Let's get rid of the TV trades background and the trigger so you're not distracted. Sure, Jeff. And this is what it looks like here. Okay, so this is on the crude oil swing trade today. You would have only had this one right here, really. You would have this one trade right here, and that's working out pretty well. It's on a 19 range, so it's $10 a tick. So the entry point would have been right here at 59, and so far it's had a high of 83. So we'll say 60 up to 83, 23 ticks, $230 a contract. Okay. Let me go out here for a second and see. Right, what I wanted to show you is going to be this. Hang on. There's so many things in the way over here on this other monitor. The question box is one of them. Oh, sorry, guys. Swing trade. I think this is what, yeah, this is what I was looking for. Okay. So, there's a couple of questions that came in. Crude, how to avoid the stop trades around 12 on the 21st yesterday. How to avoid them. There's no real way to avoid it. I mean, you see the trigger and you just take it. You would have stopped out right there. There's no way to avoid that, right? It would have happened. You're going to have stop outs. There's no way around it. The risk management is key, though. Okay, John. And Jeff, can I show a stock like Microsoft or Tesla? I will do that in just a minute. Paul, can I briefly explain the trades based on the black arrow, please? Let me show you this, alright? When you sign up and I enable you for the TV trade swing trade, I have this in here. Now, I know this is really small to you. I wish I could make it bigger. I might be able to make it bigger like this. And that's going to make it smaller. But the TV trade swing trade management suggestions, risk management suggestions, the stop is 10 to 15% more than the bar size to break even after hitting the bar size in profit. So like for For a 100 range, once you get 100 ticks in profit, you move the stop to break even, maybe plus a little bit. Initial target would be like 150 to 200 ticks. Final target would be the next gray arrow. That is a suggested way to trade it. Now you can trade it however you want. That one email that I sent out last week, I think there were 3 of them actually last weekend that I sent out about that one subscriber who did 4 trades from his phone, and he made money on all 4 trades, and he did really well with it. He's got a set target that he puts on trades. All right, he uses a set time frame, so he has the same bracket that he puts on trades all the time. And so his risk management strategy is a little bit different than this. The stop is about the same, but the targets are different. Like I think he has like a 200 something tick target that he hits most of the time. Now you can use risk management that way if you want to. You can use the cycle that the way I use risk management, I like to get my risk off the trade relatively quickly. Now you can do that if you want to. You can do it however you want. Like for me, this right here, this long trade, on a 19 range, after 19 range bar goes 10 ticks into profit, I bump the stop to break even. Okay? After it goes 10 ticks into profit, that's just my thing. And it's even right here. I think it's on here. Go here to more, and you do risk management, 19 range. It's a 25 tick stop, goes to break even after 10 ticks with a 45 tick target. Alright, so these trades right here, we would have had, we'd still be in the trade right now because it only went 29 ticks in profit. But after it went 10 ticks over here, it might have taken me out of break even right over here. Alright, depending on where my entry was, it might have taken me out of break even. It might not be. I might still be in the trade. But crude oil, it really stopped trading at 2 o'clock, so I probably wouldn't be in this trade anymore. The one that from last week, 100 range, Wayne. 100 range, yes. So he only gets 1 to 2 trades. Even some days he doesn't get any trades. Okay, so Paul, the black arrow, the entry point, and this is all in that swing trade email that goes out. There's actually a video that I have about this too that goes out in that email. So if you sign up, if you take the trial, Paul, give me a TradingView login ID, then you'll get all the information about how to use this. The entry point is the open of the bar after the close, where you get the black arrow. So you open the bar after the close. You get the gray arrow that suggests the next bar could be the trigger bar, so you start paying attention. And you could be proactive and put an order on ahead of time, because if you're using range bars like I do, you can be proactive and put an order on ahead of time if you know what the bottom is, the top's going to be. Or you could just wait. You just wait, and it's going to give you could set the alert on it. Set an alert, just come in here and choose swing trade and say any alert function call. Put a message on here, say whatever time frame it is, whatever symbol it is, alert me. And you can get an alert sent to you. And what I didn't show you in here is the different ways that alerts can be sent to you. If you have the app on your phone, you can do notify an app. You can do that. You do show a toast notification. That's what pops up here on your screen. You can have it send you an email if you want. You get an alert in your email to let you know when you get an email. Specifically when you get an email from TradingView. You can make your own webhook if you want. You can have it play a sound if you want. Now the webhook stuff, that's what I use to get to Telegram. I created a webhook that sends it to Telegram. Okay. John, before I answer your question, let me answer Jeff's. Okay. Can I show a stock or something like Microsoft or Tesla? I can. Now let me just. You want to see it with the swing trade stuff, right? Jeff? Okay. Let me just explain. When you're using stocks, equities with swing trade, or even ETFs with swing trade, every tick is a penny. Alright, so these are 19-cent bars. You don't want that. On a $300 stock, you probably want to have like 100 range, so every bar is $1. Okay. Or for a swing trade, you might want it to be even bigger. You might want every bar to be $5, in which case you'd have a 500 range. And every bar is $5. Okay. And it's the same information. It's the same stuff. You know, if you're using ETFs and if you're using options on ETFs, you know, that's what I would recommend doing. Instead of actually buying the ETF, you can buy, you know, SPY calls or puts, or, you know, QQQs or RLMs, or you know, whatever you want to buy for the ETF. If you want to do, like, I had some other ones that I was looking at out here the other day. Is it this one? I don't know. It was one of those that I was looking at the other day that were 3x. They were 3xDNQ or something like that. Anyway, it worked out great when I was looking at it the other day, but like I said, this past week I've been kind of out of the loop. But that's what you would do, Jeff. You would use it on a larger time frame like this. Like a 500 range means a $5 bar. Every bar is $5. And you go down to a 200 range, every bar is $2. But the swing trade stuff still works the same. You get the same kind of indication, the same kind of notification if you set the alert. Okay, for ETFs like QQQ, for instance, you know, that's $500, so you probably want that to be a little bit bigger. Now, if you want to do something, if you want to do cryptos, like if you do Bitcoin, you're not going to want to do it on something as small as that. You're going to want to do that on something like this guy right here. A 10,000 range. Alright. So every bar is $100. Okay. But everything works the same across all markets. You know, you just got to pick the time frame that suits your investment style, your risk management. And it's going to give you the information. The smaller the time frame, the less you want to use the swing trade stuff. I mean, if you are going to use the swing trade stuff and you use it in a smaller time frame, I would use it in conjunction with the other things. Alright, I wouldn't use it blindly by itself. And what I mean by that is if you're going to do, like, let's say, let's go back to the NQ, and you do that, like, let's say on a 47 range, okay? Which is what I trade with sometimes in the morning session, if the markets are really active. Now, with that, you might want to put the swing trades on and only go with the background colors that are right. Okay, only take the trades, the swing trades with the background colors that are right. It's going to limit the number of trades dramatically, but but it'll stop you from over trading. Okay, the idea behind the swing trade thing is to get you in at the end of the trend. So it's going to be the opposite of the background color. Typically, it's going to be the opposite of background color because the idea is to get you in at the end of the trend, not at the beginning of the trend. Okay, that's why it's a swing trade. It's to get you in at the end of the trend, not at the beginning of the trend. So that, I think, might answer, John, your question. Is a 10 range not advisable? Well, it depends on what market it is. I wouldn't use a 10 range on the NQ ever. But a 10 range on something like soybeans, maybe. A 10 range on bonds, that would be fine. A 10 range on something that's not really volatile would be okay. But a 10 range on the NQ I would never use. Not with any of the indicators, not with any of the tools that we have. Okay, oops. It's just too fast. You know, and when the market starts jumping around a lot, it's going to jump around. You know, you have a spread of 10 ticks sometimes on the NQ. Today, we had that today at one point when Powell started speaking at that symposium, Jackson Hole. All right. Let me see. Joe, what about the blue bar on the NQ? Okay, I think I answered your question. Alright, I think I answered all the questions that were texted. Wow, it's 3:45. We only got 15 minutes left. Right, so we're up pretty good so far, right? I'd like to get some more trades in here if we can. Let's see on the NQ. Let's go back to the NQ 19 range. And we'll put the stuff back on here. Put that on and this. I explained how the midpoint works for you guys, right? To the point where you could trade it, or you understand it, to the point where you might be able to trade it. What we're looking for over here on gold right now, we want an up close on this bar that was put this in the overbought, and to put it pretty close to the midpoint, but the next bar would be your trigger bar. Right, like right here on the Russell, this could be your trigger bar. We need a down close on this. It's got a high of this isn't the Russell, this is the ES. It's not in my Russell one. But anyway, we can do it with the ES too. Actually, the ES is too far away right now. 81.75. Yeah, it's going to close above the midpoint, so that's not going to be a trade on the ES. Right, this is usually my ES. Put that back on my ES. And we'll put that back on my 7 range. And I'll put this back on the Russell. And that is usually a 9 range. 9 range. Does everybody understand range bars? Paul SP, do you understand range bars? Why I use range bars? Range bars are the best. If you don't use range bars, you are limiting yourself. Why don't I trade 19 tick MNQ with the swing trade tool? So I don't trade. No, I don't trade that with the swing trade tool. So I don't. No, Jill, I don't. If I was going to trade the swing trade tool on an M anything, on any micro contract, it would be a big number. I'd be trading a big number. You know, trading, scalping the micros is, well, you gotta be really good at it to be successful at it. Alright, but if you're using the swing trade, that's not scalping, that's swing trade. So, I mean, that's great. If you want to swing trade the micros, that's great. There's nothing wrong with that at all. You can do, you know, if you swing trade 5 micros, that's half the risk of trading 1 regular size, like 5 micro NQs. Your risk is cut down to $2.50 a point instead of $5 a point. And there's no shame in that at all. You know, and there's more liquidity in the micros. Micros have more liquidity than regular size contracts. All the micros do, as far as I know. 16.6 down to 15.6 is still what we're looking for here on gold. Sorry, slide that over. Okay, now these are all in the blue. All the indexes just flipped to blue, so they have all bullish background right now. So there's a chance that this is going to flip to bullish too. Let me just shut off the, you see how all the bars are blue right here? That's because I left this on right here. But if I shut that off, then the bars are all red. So let me go find that DOM. I just lost my DOM. Here it is. Window always on top. Alright. You have a great weekend too, Wayne. Thank you. Alright, it's 3:49 now. Now, everybody that signed up for the webinar, you will get an email automatically sent out by GoToWebinar in 3 hours. That's going to have a link to the video, and it also have a link to sign up for next week's webinar. Next week will be on Wednesday, as it usually is. Okay, unless something goes crazy wrong between now and then. My mother is still in the hospital, so could happen. Hopefully. 16.6 down to 15.6 now on the gold is what we're looking for. Now this, you see how we just had a red bar with a blue background, so you're probably going to get a change of the color background here, possibly. We went back to blue bar, maybe not. We're in the oversold here, we just need to hit the midpoint and close up. You are welcome, Sid. Right, I'm sorry I wasn't able to do this on Wednesday, but Wednesday I was all over the place in Connecticut. And we got back last night here to North Carolina. It is so good to be home. You know, I like going away and seeing my family for a little while. But I love being home. 16.8 down to 15.8 now on the gold. Okay, now this is what I was trying to show you earlier. You see how this came out of the oversold right here, but did not make it to the overbought? I'm not interested in any more long trades on that. Okay. I'm not interested in any more long trades on this right now. It's got to get all the way to the overbought, then back into the oversold, and then come out of the oversold again. Otherwise, you probably don't have a trend. So what am I up right now? I'm up 9 on gold, 2 on the Russell, and 24 on the NQ. That's where we stand on this session. We're about to get a trade here on the ES. We just changed colors over here on the NQ. Now, as we wind down this session, and we get closer to 4 o'clock, remember it's Friday, not Wednesday. So we're about to get a trade here on the NQ. We could have a trade trigger on this bar. It could hit the midpoint and give a down close on the same bar right now on the NQ. Okay, so this could be our trigger bar on the NQ. It's not there yet, but it could be. Right, now you see it's hit the midpoint, so now you just got to find out where the bottom's going to be. If the high is at 68.75, the bottom's going to be at 63.75. Right, now if the top goes up any, it's at 69.25, we're going to be going down to 64.25. 5 points off the top of the bar on the NQ, and there it is, and we're short, and here it is. Gave me 1 tick of slip, and I don't think it's gone 10 ticks in a profit yet, but it might have. I expect it's going to make it down right here to 555, Paul. You see that? 555. So it should go down to right here, right now. Okay, there, now my stop's going to break even. I'm probably going to end up with a break even. I did end up with a break even. After 10 ticks in profit is when it should go to break even. For me, anyway. That's my risk management strategy, but it should make it down here to the swing level right now. Okay. Now, we never did get the gold trade, but the high of that bar is still 16.9, so this should be at 15.9. Okay, so we ended up with a break even there on the NQ. And I don't know that we're going to end up with a gold trade here. We could, but I don't know that we're going to. Okay, now remember what I said a few minutes ago about getting a trade that does not go down through the prior swing low. That shows weakness. Okay. You got 100 ticks on the NQ100 range. Great, Jerry. Did you have a black arrow on it? Did you use a swing trade? You probably did, right? Swing trade, 100. Yeah, you did right there. Sweet, and you just got 100 ticks out of that. That's awesome. That's exactly what you want. And you only got to do that 1 time a day, right? 1 time a day. And if you do it with 2 contracts on, that pays for a whole year's worth of TV trades. If you do it with a micro on, it pays for a month worth anyway. Just about, right? A couple of weeks. Let me shut that off now, so it's not too confusing. And put that back on the 19 range, so it's not too confusing. Alright, so we didn't end up with trades anywhere else. The gold closed up, not down, so now it's 17.2 down to 16.2 on the gold. Alright, it'll still be a trade as long as the entry, as long as the top of that bar is below 17.5, then there's still a chance for a trade here on the gold. But you see, I'm going to wait now. I'm going to cancel this because you see how there's a blue bar right here, Jill? You see the blue bar right there? That suggests that the background color could change on a down close. Whichever way this bar closes, it doesn't matter. It suggests the background color could change. So I'm going to wait for the bar to close before I enter. Okay, and there, now it's not going to be a trade at all, because 17.9 is going to go down to 16.9, so it's not going to be a trade at all. And the background color probably is going to change next. Let's crunch this up a little bit so we can see if we have any trades. We don't have any trades in there. Just do this. Cancel. slide this back over here to the other side. It is now 9:56. We have 4 minutes left. It's possible we could have a Russell trade here. It's possible. Okay, so we're at the midpoint, we're oversold. So right now, all the indices are going down right here. I don't really want to trade the Russell long, but it's just about setting one up. It's got a low here 68.3, so it'd have a high 69.3. You'd be buying 69.3. The midpoint is at 69.2, so if it goes down one more tick, you wouldn't want to do this on the Russell. I don't really want to do it anyway, because all the indices are going down right here. But the Russell can, oftentimes do its own thing. Alright, so over here on the NQ, you're in the overbought, you're not at the midpoint. You came out of the overbought, reset the midpoint, no trade. On the ES, you need an up close to get this into the overbought, then a down close off the midpoint. Okay. No trade over here. Just make sure that is the bar color is on. There we go. Okay, so that did give us a red bar. This is not a trade here on the NQ. So this one where it came out of the oversold, not off the midpoint, did not go into the it came out of the overbought, not off the midpoint, did not go into the oversold. Means nothing after that matters. Okay, so there's no trade over there. No trade on the gold. No trade on the Russell. Let me cancel the order I had waiting on that. Looks like we could be done here, guys. We only have a minute and a half left. The ES is the only thing that could trigger a trade right here. I don't think it's going to. Nope, it's not. Alright. That's good, Jerry. You wrapped up the week with 100 tick NQ trade. That's sweet. And looks like my last trade is going to be that 24 tick NQ trade that I got. My last profitable trade anyway. But it's all pretty simple, right? This stuff isn't that hard to do. Anybody can do it. Especially the swing trade stuff. I mean, really, the swing trade stuff, you just gotta throw. Just gotta throw it on there, and do what it says. That's pretty much it. Just drop the swing trade on your chart and do what it says. Okay. Alright. So that's going to be it, guys. We're going to wrap it up here, I think. If you haven't taken trial and you want to go to tvtrades.com, that's one of them. I mean, you can do it from Target View Trades too. Remember, targetviewtrades.com has got a lot of other information if you want to go watch some of these videos, the sniper videos in there. Upcoming past the trigger. It's got the optimized trigger and how that all works down there. All the upcoming and past webinars, like next week's is going to be right here to be able to log into next week's. This one is going to be right here. Alright. And how to get the charts, how to get your trading view charts. The risk management is right in here. Alright. All that stuff is on targetviewtrades.com. To sign up for the trial, go to tv-trades.com, tvtrades.com, sign up for the trial there. Alright. That is going to be it for today. You are welcome, Jerry, and all you guys that said thank you. You are all welcome. Thanks for coming today. I am going to stop the recording now. Alright, so we did wrap up today. We made $900 in gold, $200 in the Russell, and I'm sorry, yeah, that's right. No, we made $100 in Russell, $900 in gold, $100 in the Russell, and $1,200 on the NQ. So that was $2,400 altogether in this session. I think that's a little below our average on the Wednesdays, I think, but we'll still take it. Let me see what the average actually is on the Wednesdays. I think it's over here. Wednesday totals. We'll just add them in right now. Today is 8/22. On the NQ, we made 24 ticks. On the Russell, we made 2 ticks. On the gold, we made 9 ticks. Okay, nothing on the ES. So we're up $2,200 today. $2,200. I thought we were up 24. But $2,200. And we took a total of 4 trades. 4 trades, and this becomes a 16. So in these sessions, on the Wednesday sessions, this is normally Wednesday session, we're averaging $3,239 with 10 contracts on, or $323 with 1 contract in the Wednesday sessions. Now, that $323 is easily enough to pay for the subscription cost for several months, actually, to pay for the subscription cost. So you get enough just out of these Wednesday sessions, or the weekly sessions that I do, to more than double your cost. Alright, that is it. I'm going to wrap it up. Thank you all for coming. There's another trade coming up right here on the NQ. Right there on the NQ. I'm going to wrap it up, and I will catch you all later. If you have any questions, you can email support@targetviewtrades.com. Alright, support@targetviewtrades.com. If you sign up for the free trial, you'll also have my phone number, so you can text me at that number. Alright, you can get me on Telegram as well. My Telegram ID is @trading_I_Q. @trading_I_Q is my Telegram ID. You can hit me up on Telegram as well. Alright. You get all this stuff, and then you also get access to all the Telegram channels. So you get access to a whole bunch of things when you sign up. That measly little price I charge you guys. I really ought to change it. Anyway, I'm going to wrap it up. Thanks for coming, everybody.